Hello friends, welcome back. So today we are going to discuss about HDFC. So this is a part of the series which we have made about the top 10 stocks to invest in the 2022. So in that video, we have done the technical analysis and identify the potential available in those 10 stocks. As our discussion involves the fundamental financials and technical analysis of a stock, so we are going to make a detailed analysis of individual stocks which we have discussed in our last video of top 10 stocks which we can consider to invest in 2022. So out of those 10 stocks, I have already made the video on Axis Bank, Hindustan Unilever and HDFC AMC. So the link of those three videos I will share in the description box. You can watch those videos also to understand the potential available in those three stocks. Before starting our discussion, if you are new to this channel, please subscribe this channel so that it will help us to build a big community and you will get a regular update on value buying opportunity. You will learn how to do a fundamental financials and technical analysis of those stocks. So now let's start our discussion. So let me share one report which HDFC has posted after posting the financials of Q3 FY 2022. So this is the report which they have recently posted. So if you can see, HDFC is a parent company of these stocks. So they have the promoter holdings of 21% in HDFC Bank. In HDFC Life, they have the shareholding of 47.82%. In HDFC AMC, they have the holding of 52.62%. In HDFC Ergo, that is a general insurance company, they have the holding of 49.98%. And in the other three companies, that is HDFC Sales, HDFC Credila, HDFC Property Fund, HDFC Capital Advisor, they have the promoter holdings of 100%. So these are the sister companies of HDFC. Now let's see few of the key financials parameter of HDFC. So current loan outstanding, that is a gross loan as on December 31, 2021. So it stands at 6,18,917 crore. And if you can see the individual loans originated, and it has posted the CAGR in last 5 years, the growth of 16%. So the revenue coming from the individual loans which they are lending to the customer, they are generating a revenue growth of 16% in the last 5 years. As far as the profit after tax is concerned, so the consolidated PAT, and that is the CAGR in last 5 years, it stands at 21%. They have shown a good growth as far as the profit after tax is concerned. Now let's talk about the overall impact of COVID-19 as far as the housing finance industry is concerned. So in Q1 FY22, that is witnessed an eruption of a second wave of COVID-19 in India. Post that, there was a sharp recovery in terms of business, and in January 2022, the third wave of COVID-19, that is Omicron, resulted in a rise in infection, but with considerable less severity, and it did not resulted in any material impact on business. So that is a good sign. Now the second important point is the demand of housing finance continues to remain strong, and during last 3 quarters, if you can see, individual loan approvals and disbursement of HDFC grew by 45% and 48% respectively as compared to the corresponding period in the previous year. So they have shown a great growth as far as the loan approval and disbursement is concerned. Now, what is the driver behind this growth? So if you can read the third point, the driver for this growth is digitization. So see scale up on the digital platform for borrowers, depositors, channel partner, deposit agents, amongst other. 89% of the new loan application were received through digital mode. So again, as I told you, digitization and the digital platform has boosted this housing finance industry to a great extent. Now let me show you one graph about the mortgage market in India. So this is the graph I wanted to show you. So if you can see, the left vertical axis is the property value in lakhs, that is the value of the property, and the right vertical axis is the annual income of the middle class family or the upper middle class family. This graph is showing the affordability of housing finance. So if you can see, in last 20-25 years, the affordability has increased so much. So affordability is nothing but the value of average property divided by the value of average annual income. So if you can see, in 1995, the value of property was around 20 to 25 lakhs and the annual income was around 1 to 1.5 lakhs. So if you can divide the average property value by average annual income, you will get the affordability. In 1995, you can see the affordability was 22 times as far as the annual income of individual is concerned. But in current year, that is 2021, the affordability has improved drastically. That is, it stands at 3.2, which means that average property value of 55 to 60 lakhs divided by the annual income of 15 to 16 lakhs, you will get the affordability of 3.2. As the housing finance sector has the direct correlation with the GDP and the per capita income, and that is the reason with the increased GDP growth and the per capita income of middle class and upper middle class, this affordability of housing finance has increased in the last 2.5 decades. Now let's talk about the penetration level of housing finance market in India. So if you can compare with the other developed country, the penetration level of total outstanding loan divided by the GDP of India, so there is a huge gap as far as the mortgage in other countries are concerned. So this means there is a huge potential of housing finance industry to grow in near future with the increment of per capita income and the GDP growth. So we have talked about the fundamental of companies. Also, we have discussed about the impact of COVID-19 on the overall housing finance sector, and we have discussed about the affordability which has improved in last 2.5 decades, and there is a very low penetration level as far as the total housing sector is concerned. So there is a huge growth potential going forward. Now let's discuss about the finance of the HDFC. So this is the financials of HDFC. So HDFC is the largest housing finance company in India with a market cap of 4,37,000. So if you can see, the profit in previous 12 months, it stands at 20,826. So they have posted the highest ever net profit as far as the trailing 12 month is concerned. Now let's talk about the quarterly result. So if you can see, in March 2019, the revenue was 28,747, and as on December 2021, the revenue stands at 31,000, and they have posted the highest ever revenue in December 2020, which is 39,259. So after the March 2020, if you can see, they have shown the consistent growth as far as the revenue is concerned. If you can see the net profit, currently it stands at 5,837, and in last 4 quarters, they have shown the consistent growth as far as the net profit is concerned. So financials of HDFC is great. So let's talk about the profit and loss statement. So in March 2010, the revenue was 25,413, and as on March 2021, they have multifold their revenue, which currently stands at 1,39,000. So in last 10-11 years, they have 6-fold its revenue, and they have shown the consistent growth as far as the revenue is concerned. Now, if you can see the net profit, again, it has shown the consistent growth. So in March 2010, the net profit was 3,241, and in March 2020, they have posted the highest ever revenue, that is 21,435. And if you can see the trailing 12-month profit, it is again the highest one, that is 21,486. So the financials of HDFC is great. They are showing the consistent growth. And now let's talk about the capacity, which is the lending capacity of HDFC. So if you can see, as on September 2021, the lending capacity stands at 4.69 lakh crore plus 1.63 lakh crore, so which stands at 6.3 lakh crore. So as we have seen, the fundamentals are great as far as the total housing finance is concerned, and also the interest rates are at the lowest level as far as the last 10-15 years is concerned. So going forward, there is a huge potential for HDFC to grow and multifold in the next 5-10 years. Now coming back to shareholding pattern, so if you see, there is no promoters as far as the shareholding pattern is concerned, because the FII holds 72.14%. So this is not a domestic company, this is an MNC with a FII's holding of maximum, and DII holds 16.59% and public holds only 11.13%. So overall fundamental and financials are great. So let's talk about the technicals of HDFC, and let's identify how much potential is available with the analysis of chart pattern. This is a chart of HDFC, and if you can see, HDFC is currently trading at a strong resistance and support line. So this is a strong resistance and support line of price level 2414. So if you can see, this was the price at which the stock has broke down because of the COVID impact, and again it has taken the resistance at this price level. After a small resistance, they have given the breakout from this price level and taken a multiple support at this price level of 2.14. So these are the support levels which they have taken, and currently also it has taken a strong support at this price level. This is a strong resistance and support line currently HDFC is trading. Now let's see how much potential is available in HDFC. So if I can draw, so this is a neckline, and HDFC has formed a reverse head and shoulder pattern. So this is the left shoulder, this is the head, and this is the right shoulder. So if we can take the depth of lower price level up to the neckline, and if we can take that price level and put it on the neckline, we will get our technical target. On basis of our technical analysis, if we can take the price level from current price level up to the potential target, the potential available is 45%. So again, that is a good potential. Now in HDFC, there is a second pattern which has formed recently. So if I can draw it, this is a cup with handle pattern. So this is the neckline, this is the cup, this is the cup, and this is the handle. And if we can take the depth of this price level up to the neckline, and if we can take that price level and put it on the neckline, we will get our technical target. So in case of HDFC, we got two targets. So let me draw it from the current price level up to this price level. So we will get our technical target of 40%. So we got two targets. So the first target is 40%, the second target is 45% with a price level of 3,500. So even if it takes 1 year to achieve its technical target, we will get a good growth and the potential gain as far as our analysis is concerned. So I'm a buyer in HDFC, but when I'm saying I'm a buyer, this is not a buying or selling recommendation. Please do your due diligence or consult your financial advisor before investing in the stock market. So please watch the complete series of these 10 stocks, where we will be doing the detailed analysis of individual stocks. So I hope you have liked this video. I will see you in next video. Thank you.